I'm just trying to display your QR code. Just need to. Okay. Right. Has everybody managed to scan in?
It's not accepting responses.
Oh, this is February. Sorry. I thought I deleted that one actually. Choo. Okay, so what I want us to actually do today is to actually do your other high stuff. Do you want to do it?
Yes.
Yes.
You, ma'am.
Which is question 5.6.
Let's Yes.
What? No. That's why I'm also doing it because remember, they could ask you this in what? In the head. Okay, because it falls under learning unit 5, isn't it? Okay. So for our first session, that's what I want us to do. It's really not that bad. It's just one of those that you need to practice. Unfortunately, you don't get another exercise like usually just that one, but they have asked in previous tests. So, but yeah. So fortunately, we'll be doing that today. So guys are not caught off guard. But you'll see now it's not that bad at all. So this is what I take it some of you have tried it. Have you attempted it? 5.6, your ICE task. You just browse, had a look at it. Okay. Wow. Okay, so if you read there under the requirements, there's a basic general ledger reconciliation statement as a 31 May. Okay, so if you flip back, you see a under example 5.2. You can also go through that to get a feel of what they're actually expecting you to do in question 5.6. All right. There you can see this is the trial balance. All they've done is they've added on 2 columns: recommended, adjustments, and then corrected balance. That's it. So if you look under 5.6, it says the following incorrect trial balance appeared in the books, all right, on 31 May 2009, isn't? And then it goes on to say the business makes use of the manual bookkeeping system and is a registered VAT vendor and deals only with other registered VAT vendors. A standard VAT rate of 15% applies. Okie dokie, okie dokie. Just want to double check something. Let me just close that as well. Okay, it's not what I was. Right, okay, perfect. Super. All right, So there we have our trial balance, isn't it? And if you look at that trial balance, at the bottom of the trial balance, you look at the debit and the credit, do those amounts match? No, they do not. Okay, so we know we have a problem. It means that there's been some errors or some omissions, something to the effect. Okay, so they give us the errors and omissions that have been depicted or detected, and then obviously we now need to make the necessary correction. So first one, it says drawings by the owner amounting to 1,700. Cost price excluding that was recorded as follows. Okay, so there you can see they give you the scenario drawings by the owner amounting to 1,700. This is excluding that, and this is the cost price. So if you don't know how to record drawings by the owner, you will not be able to make the correct amendment here. You see, and then they're showing you how it was recorded. They said it debited cost of sales and we credited trading inventory. If you don't know how to record drawings by the owner, you will not be able to see where the error is there. Does that make sense? So now goes back to what we learned in learning unit 2 and 3, where the first thing is we need to understand our transaction. Okay, this was drawing of what? Of trading inventory, isn't it? Oh, I didn't say, just says drawings by the owner. Okay. So we're actually using the base, the transaction here to see where the mistake actually arises from. So here, should we be debiting cost of sales? Yes. For drawings? No. Which one is it, yes or no? No, we shouldn't, right? Okay, we've never done that. We should definitely not be doing that. So that, first and foremost, we then now need to correct. Okay, so we go to cost of sales on our, what do we call this statement again? General ledger reconciliation statement. If I can stick that, there we go. So we go to cost of sales and we go under the recommended adjustments column. Where's my cost of sales? That should be under your nominal account section. Oh, there we go. Here we go. And we are doing what to correct it? We're crediting, okay? So we come to the credit side and we say how much? 1,700. Oh. See, it's not that bad. Okay, so now we've corrected the error. Okay, the next thing that we then need to do is we can see that it was credited to the trading inventory. Okay, so he took out trading inventory, so no problem, that we can leave as is. We know that trading inventory is the amount exclusive of VAT, isn't cost price exclusive of VAT. So we're happy. That is as it should be. However, have we debited drawings? We haven't. Okay, so then we go to drawings, which we know should be in the statement of financial position or the balance sheet section, and we throw in on the debit side your 1,000. Can we throw in the 1,700? Do we record drawings on the cost exclusive of that? Is it? Drawings we include the VAT. Because remember, we said drawings, we can't claim input VAT on drawings, isn't it? So we have to say 1,700 times. To get the inclusive, what do we say? Divided by 100, which is going to give you 55. Okay, so in the drawings here, we're debiting 1,955, which means that there is what type of VAT on this? There's input VAT that we need to reverse by making an output transaction. And there you can see the difference is obviously 255. Huh? So now here, I see in this particular question, they don't actually have a input VAT and output VAT. So you have to use the VAT control. And I know we have never discussed the VAT control because this is the only time in your entire textbook I've ever seen them ask about the VAT control. You can think of the VAT control as your, what do you call it? VAT return. Remember your VAT return, we said it's where you have your input VAT and your output VAT, and you're calculating the difference between the two to see who needs to pay who. If our input VAT is higher than our output VAT, SARS is paying us. If our output VAT is higher than our input VAT, then we are paying SARS, isn't it? Okay, so on the credit side is where you'll have your output VAT, and on the debit side is where you'll have your input. So this 255 is going where? Yes, output VAT, which is going to be on your credit side. Okay. So here, where's my VAT control? There we go. I'm going to credit 255. 255. Are we together? What's the problem? You didn't just arrive now, huh? Were you with us from the beginning of the question? Okay, so where don't you understand? Work with me. Yes. Cost price exclusive of that, 100%. So you see, this is the thing about it. This is how we test the level to which you know you're accounting. Because we're not just giving you a transaction and saying record it. We are saying an error has been made, right? So first you must fix the error, then you must record the transaction. Now fixing the error depends on what mistake was made. Does it make sense? And you must identify the error. After you identify the error, correct the error, then record it the right way. And even recording the right way depends on what was missing from what may have been recorded correctly. Can you see that? So we're really testing your knowledge here, okay? So firstly, when you read the transaction, you need to see, okay, what is happening in the transaction? Then secondly, what mistakes were made, if any? Because sometimes it might be we just didn't record the transaction. Does that make sense? So in this instance, what they've done is they did record the transaction, but they recorded it to the cost of sales. Now, when there's drawings, cost of sales is not affected, right? So immediately we need to reverse that. So how do we reverse it? We have basically said that, what's going on here? Cost of sales, this is pretty much what they did to cost of sales. It's an expense, isn't it? All right, and they basically have put this 1,700 here. Can you see that? They've debited it. But now this was never supposed to happen. So in order to remove that, we need to credit 1.7. Can you see that? So that we cancel out the initial error that was made. So that's the first thing that we did, which is what we have done here. Where's my cost of sales? There, over here. Can you see that? So trading inventory, it's fine. It was drawings of trading inventory. So we're leaving it as a credit to trading inventory. And we know that we record trading inventory at the cost price exclusive of that. So we're happy with that. That we're leaving alone. However, we now know that we have not yet recorded the drawings in the drawings account. Does that make sense? And we know whenever we have drawings, this is going to test your dead click, guys. What do we do? We have to debit. Increases on the debit side, decreases on the credit side. So this amount, which we calculated here, because we know drawings is the cost inclusive of that. It's going this side, which is why we debited.
So sorry, maybe your confusion is coming from I did not speak to or explain why are we debiting, why are we crediting. Okay. Yes. Remunerated, recommended, you mean? Yes. We recorded in all the amendments and corrections that we're doing, they have to happen in the recommended adjustments. Okay. The incorrected trial balance is how it was, how we, our trial balance, sorry, give me a second to gather my thoughts. The incorrect trial balance is the trial balance with its errors before we made any adjustment. Okay. And you'll see before we end off this question why we separated them and how we then get to the correct balances. Because if our balance on the debit and the credit side are not balancing, it means that we've made errors around our entry of our transactions. Does that make sense? Okay. Are we on the same page now? Happiness.
The transaction for 1.7. What is the variance versus 1 instead of 1 today? It's what you mean according, like in terms of like in this case, it's 6%.
Yeah.
And then it means that 1.7, I think the site is being cancelled.
Okay, so yes, in effect, you're bringing this account to be to zero. This is also cancelled. It's I don't want to say cancelled, but it is canceling this one. Can you see? Bringing it to before this transaction as if it never actually happened. If we were to record it a second time, can you see now we're actually increasing what we have just done. So if we were supposed to credit cost of sales for any reason, then it makes sense to do it twice. So it's if we would have credited it twice, it means that maybe we accidentally did a debit instead of a credit. So the first credit, this one, would be to cancel out the debit. The second one would be to actually record it correctly. But in this case, all that we are trying to do is to cancel. So that's why we only entered it. Okay. Yes, I heard some voices there and I see your hand. Talk to me. All right. It's off. Let me check, man. Maybe the light just decides. Maybe the light just decides. Is it really off? If it's off, it's off. If it's off, it's off. I switched it on at the beginning. I'll be near my phone. Maybe my phone will just use its own speaker. I'll walk around with it. Don't worry. It means that the battery is low. Because I haven't charged it since I got it. Well, let me explain. I charged it when I got it. After using it, I haven't charged it. Huh? But you guys told me, and I asked you guys before I started using this thing, do you actually go and do these assignments? When? In this semester. Let's continue. No, I'll keep my phone close. Don't worry. I can see it's registering the voice. So, everybody happy with the first transaction? We can move. Sorry, yes? The VAT control, yes? Re-explain. So the VAT control is basically your input and your output VAT. So if we have any input VAT, it'll come this side, onto this side. So you can think of it as the VAT return, because ultimately, when we balance this account, it's going to tell us how much of that, whether we have more input VAT or more output VAT. Because remember, whenever we balance an account, we'll say which side is bigger and which side is smaller, and then we'll say carried down, brought down. So if we have a debit balance, that means our input VAT was bigger, which means that SARS needs to pay us. If we have a credit balance, it means that we will need to pay some. Okay. That's right. Okay. Let's go on. I must make every exercise an ice task because I see how people are engaged, how serious they are. I like it. Yes, it is. Due on the 20th. So if you're not writing, write, my friend, so that on the 20th you can rest. Just submit. Yeah, we're going to finish. Refreshments were bought for 230 Rand from petty cash, but input VAT was erroneously claimed on the purchase. Here you need to pay special attention. Eh? The transaction was also recorded in the cash payments journal instead of the petty cash journal. So what's the problem here? When we talk about refreshment, can we claim input VAT?
No.
Why? It's not allowed. It's for staff. Right? Anything for staff, we say not allowed. Okay. So we need to first calculate what is the VAT here. 230. Sorry. So we say 15 over 115. What's our VAT? 30. Okay. So now, how would we claim this as input VAT? So meaning we would have done we would have debited. So in order to reverse this, to cancel it out, what must we do? Just once? Just once, because we're just canceling. Okay? No, I must check. Are you getting it? Okay, so we go to the VAT control, we go to the credit side, and we throw in that 30. And we're done. Yeah, guys. So, I mean, what else can I say? There's nothing else I can say. Okay, or you can erase if you've been writing in pencil and then, but you won't remember where you got the full on amount. Okay, all right. So, but it doesn't end there. It says, then transaction was recorded in the cash payments journal instead of the petty cash journal. So, what else needs to happen? We need to remove from bank. Okay, you can start either way, it's fine. Because basically, we know that the cash payments journal is going to get posted to where? The bank. So, we then say, okay, bank, this was a payment. So where would it have gone? Would it have gone to the debit or the credit? It would have gone to the credit. So then we now need to debit bank 230, isn't? To cancel this out. Okay? To cancel it out. So we go to bank and we debit the 230. And then the last thing we need to do is do what? Is record it in petty cash. Would this be money coming in or going out? Okay, can you see all the questions you have to be asking yourself? So that means we're obviously crediting the petty cash, isn't it? Because petty cash is an asset, decreases on the credit side. And we're done with your transaction number 2. Okay. Then we go to the third transaction. It says the owner made a capital contribution in the form of a personal check. Okay, does it say personal EFT in your books? It just says capital contribution. Okay, for 6,000 drawn in favor of the business, but the transaction has not been recorded as yet. So this is what we mean when we say it's an omission. We just forgot to record it, okay? So literally all that we're doing here is we go to capital and we say, what would a capital contribution do? Would we be debiting or crediting? We'd be crediting, okay? So 6,000, this one is a straightforward one. And then we go to bank and we ask ourselves the same question. Is the capital contribution going to increase or decrease the bank? And we know it's going to increase, so we debit. So then we go to transaction number 4. And number 4 there, they say, the stationary column in the petty cash journal was undercast by 720 and posted as such. Okay, so the first thing we have to ask ourselves is, what do we mean when we say something is undercast? They won't be make a plan. Trust me, there are some people who have had to make a plan. Because you know, sometimes people make mistakes with those assessments that you guys have been given. So this is good practice for that. So they said the stationary column is undercast. So what does that mean, guys? It was lower than what it should have been, isn't it? By 720. It was lower than. Okay? So we don't know the amount it was supposed to be. So to increase, yes, we must add it. To where must we add? Yes. So all we need to do is go to stationery, and what are we doing? Debiting or crediting? Yeah, bro. Stationery expense, and we simply go 720. Okay. Right. Then number 5. See, we're almost done. Yes? That is also what I initially thought. But it appears that it was only the stationery that's affected. When I look at the answers to this exercise, it's only the stationary column, only the stationary account that they put 720 into. But yeah, I would imagine that the balance should affect both your stationary and petty cash. So maybe they are saying only the stationary that was affected in that way. But let's check. Maybe your new addition, maybe they've corrected it. Because maybe because they do make mistakes sometimes. Indeed, this is what we want.
This is very good.
This one, check. This is letting you in. As my show. Because I won't be doing this again. We won't be doing this. But I see 720 on stationery. If we go to petty cash, can you see? They did not credit the 720. So yeah. Right. So we then go to number 5. Okay. And this is the last one that we'll do before we take a break. Okay. No. Based on your textbook.
Why is that?
What?
Why is that?
So look, from my side, what I'm beginning to pick up with, especially when it comes to errors, correction of errors, and is just fix what they have been alluding to. If they were to say maybe, because there they just said the stationary column, right? They didn't speak to the petty. They make sense. So I think they would have hinted or alluded to something relating to the petty cash as well. Because what I'm seeing when it comes to when they highlight an error is that they only want you to fix what they've made mention to. Does that make sense? So that has consistently kind of guided me to the right answers. Check it. So I think we take it like. All right, guys. But I love the fact that you're thinking about it because we know that that amount doesn't just affect stationery. It would also affect another account, which in this case would be your petty cash. Okay. Right. So let's see now. This number 5. It says a new computer purchased for 4,500 plus VAT, which means they've given us the exclusive, was erroneously recorded in the repairs and maintenance account. No VAT was claimed on the transaction. Erroneously. Is that the one? Which word? Yes. So someone answered there. It was an error. It was a mistake. It was done in, yes. Yes. When they say 4,500 plus VAT, it means that that 4,500 is exclusive of that. Yeah. Yes. Remember, you can get an amount either inclusive of that or exclusive of that. They said plus VAT, meaning that that 4,500 is exclusive. I'm not saying that we must or we mustn't add VAT. I'm just saying that that's the exclusive of VAT amount. Does that make sense? We will figure out now whether we should be adding VAT or excluding. Okay. So firstly, this computer purchase should not be in what? Repairs and maintenance. Ne? So again, we are basically saying that repairs and maintenance, ne? Would we have debited or credited this account? We would have debited. How much would we have debited for? Since they said no VAT was claimed. Okay, so you basically would have to take the 4.5. That's how you got the 5,000 you're talking about, right? And said VAT inclusive, which gives you. Okay, so they would have debited it over here, 5,175. So we need to do what to correct that? We need to credit it to cancel that out. Okay, right. So let's go to repairs and maintenance and do the right thing. Where is repair? Repairs is an expense, so it should be here. There we go. 5,175. Okay. Right. But we are not done yet, isn't it? Firstly, we need to calculate what is the VAT. So that should be 675, isn't it? Just saying 4,500 minus the 5,175 that we've calculated will give us 675. Gentlemen, we can hear you. At least try and whisper. Come on. All right. So now this VAT, they said it has not been claimed. So they're actually hinting, what type of VAT is this? Input VAT. And we know we should be able to claim VAT on computer equipment, isn't it? All right. So where's our VAT control? VAT control. And so we're debiting 255. Thank you so much. 675. I was checking if you guys are with me. Let's check. All right. Then the last thing we obviously need to do is record it in the right place, which is in computer equipment. Now I see here they're doing some very interesting things. They don't have computer equipment or straight equipment. It is furniture and equipment that they have here. So then you would have to use that. And we're obviously debiting the amount exclusive of that. Okay? Which is then obviously 4,500. We're debiting the furniture and equipment because we don't have a computer equipment or a straight equipment account. Yes, because remember, we can claim that. So we wouldn't put the 5,000. Yes. Right. Okay, super. So I think at this point, let's take a breather. We're just going to finish this exercise. When we get back, and then I'll tell you what we think.